Okay. I think it's already recording. So, good evening, guys. Thanks for coming. I know it's a Saturday night and you're sacrificing a lot tonight just to be here, and I appreciate that you guys are here to learn about forex and to get better at trading, and I really admire that. I'm sure a lot of your friends or family are out there enjoying themselves, and here we are learning forex. I think this is also enjoyable for us because this will make us a lot of money, hopefully, and we'll learn a lot from this session. Okay, so welcome guys to day three of our webinar series for our anniversary month. Um, okay, let's start with any questions with the previous sessions that we've had. Okay, I don't think there are any questions. I think everything's pretty clear. Okay, so let's start with MT4 continuation. Last session, um, uh, apparently that demo account was already closed. That's why it had problems entering trades. So I'll show you now how to open trades in MT4. I think we already covered most of it already. We covered navigation, market watch, the terminal, and then as well as the charts, how to uh, change the time frames, change how they look like, zoom in, zoom out, these two cute buttons right here. Basically, how to put indicators. We did all of that. So, but we missed the most important thing, which is actually how to open the trade. So it's Saturday right now. The market is closed. We're very limited to what we can do. So let's do as much as we can. If you want to open a trade, go to the chart that you'd like to trade. So for example, you have the let's have a random pair. Can anybody here give me like a pair that you guys wanna check out? Like, give me a random pair. You guys can input it there. Okay, Euro USD. We got Euro USD. Okay, excellent. So Euro USD came up first, and we actually have it on our charts. But for present for let's just try to get it from scratch. So go to Market Watch, right click there, and then click on chart window, and there you go. So you have the Euro USD charts. Wala pong audio. Leonard is saying that there's no audio. Uh, I think that how about you guys? Okay, so I think Leonard. Sorry, let me just type it down for Leonard. Okay, so I think it's your audio settings. Um, all right, so check which output you're using. Um, anyway, so let's continue. Don't worry, Leonard. This is recorded, so I hope you just backtrack later on the first part that you missed. Anyway, so we have the Euro USD chart here, and this is what it's gonna look like. Um, so it's black and green. I already uh, taught in the previous session how to change the properties of our chart. So personally, I like it black and white so that it's much cleaner. And I'll go with candlesticks because that's what we're using to analyze the charts. I put on period separators so that I know if uh, where the whole day ranges and a week or maybe a month. And then I take out the grid because it kind of looks messy for me. I don't really need it. So I click OK, and then there you go. All right, so let's try to zoom in a little bit. Right. So for now, this is what we're looking at with Euro USD. So this is the hourly chart. So let's go to a higher time frame first, so we know where it's generally going. Let's look at the weekly chart first. Right. Okay. So you have the weekly chart here. it's actually going nowhere right now. You have like some sort of a consolidation happening here. So it's just gonna jot up and down from this pennant that we're looking at here, and we're just waiting for it to break up or down. So let's say for let's say that it's going currently down. Okay, let's say it's currently going down. So let's switch to the daily chart. All right. So let's say it's currently going down, and we'd like to reach it. We'd like the price to reach maybe a little down to our trend line over here. Okay. So let's say we want to sell. So what you do is you go to new order, this Nifty button right here. I got no audio. Okay. How about the others? Can you guys hear me? Okay. All right. All right. Okay. Please check and check your. Don't worry, it's recorded. All right. Anyway, so continuing on. So let's say we're gonna sell up until this um, up until this trend line over here. So we click on new order, and you have here some sort of an order sheet. Okay, so think of it as an order sheet where we fill in all our details for our trade. Okay, so you click on symbol so that you're sure that you're at the right pair. So we're at Euro USD right now. Okay, so volume is here. Last session I talked about volume. Volume is, just to give you an idea, if your volume is 1.00, that means you're trading at $10 per pip. Meaning every pip that you gain, you get $10. Every pip that you lose around $10. Okay? It's not exactly $10. It might be a little more, a little less, depending on the pair. But generally, you can. It's safe to say that it's around $10 for easier computation. And then after that, okay, so let's go with the standard lot, okay, $10 per pip. Now, you can put your stop loss and then your take profit. Again, your stop loss is an automated command that cuts your trade at a certain price level. So let's say our stop loss would be like somewhere around here, right? So this is our stop loss right here. And then our take profit would be around this trend line over here. So let's say the current price of our stop loss will be like 1.12937. Okay, 1.1293. Negate the last digit since it's only a pipette. It's too small to factor in. So that's my stop loss. If it hits this level, my trade's out at a loss, and that's fine with me because I think it's gonna go up higher if it hits my stop loss. So my take profit is around this trend line over here. So let's try to gauge where it goes. Maybe around this level. It's at 1.1075. So 1075, 1075, 1075. There you go. So you can key in your stop loss and your take profit there, and then you click on sell, okay, because you want to sell. Okay. So if you click sell, what's gonna happen is that you might wait for like half a second, depends on the type of account you have, half a second to 1 second normally, and then your trade gets in. It would say here that your order is filled, okay, and then you'll see some kind of a bar here that your trade is already in. Okay. Sadly, it's Saturday right now, so I can't make any live trades. Okay. So if you click sell by market, right now market is closed, so that's what it's giving me. Okay. Now that's for selling. If you're gonna buy, let's say, let's reverse it. We'll buy at this level right here. Our stop loss is here, and our take profit is here. So just reverse your take profit and your stop loss. Make sure they're at the right levels. Okay, if you're buying, your stop loss is below, and then your take profit is above because you want it to go up. Okay? If you're selling the market, you want the market to go down. Your take profit is down below because you want it to go down, and your stop loss is above because you don't want it to go up. Okay? So don't worry, in case you keyed in the wrong numbers. Okay, let's say you kind of switch it a bit. You wanna buy, but you kind of switched it. So if you click that, it's gonna give you, well, market is closed, but what it's gonna say is that invalid stop loss or take profit. Okay? Invalid stop loss or take profit. So don't worry about that. If you key in the wrong levels of your stop loss and take profit, your stop loss is, let's say you're buying and your stop loss is higher than the current price. What it's going to do is that it's not going to fill your order. It's just going to tell you your TP or SL is invalid and you have to check it again. So don't worry about that. So for starters, I suggest that you guys put some take profit and stop losses so that you don't key in the wrong stuff. Okay? So that you can also practice a little bit. So that's for instant execution. Okay, that's for market orders, meaning these are for trades that you want to happen right now. Okay? What if you want to make a pending order? You just click on the type of order that you like. You have market execution and then you have pending order. You click on pending order and then it gives you a couple of choices. You have buy limit, sell limit, buy stop, and sell stop. Okay, this is going to be a little confusing at the start. Okay, so I'm going to have to ask you guys to practice a little bit after this session. Open a demo account and then just try to key in pending orders with stop losses and take profit so that you guys can get used to it and you can do it quickly in case you need to key it in quickly during trading hours. So let me just differentiate it a little bit. What are buy limit, sell limit, buy stop, and sell stop? Okay, now, when you're making a trade, you can put a pending order. Pending order is an order that will be triggered when the market reaches a certain price level. Okay. So let's say currently the price level right now is at 1.1153. Again, that's 1.1153. Now, let's say we want to sell somewhere around 1.1293. Okay, let's say at this particular level right here. You don't want to sell now. You want it to go up a little higher and then sell there. Okay, because you don't want to sell in the middle. You don't want to sell at the bottom. You want to sell above or at a higher price. Okay. So what you're gonna do is, don't forget your volume. It's written there. Okay. You put the price over here. Okay? That's where you type the price. Okay? Now, the question is, you type in the price here, and then you type in your stop loss and take profit. Same thing with what we had earlier. Now, what do we use? Buy limit, sell limit, buy stop, or sell stop. So here are just some things to guide you on that. Okay? Let me just write it down a little bit. Okay. So we use, you have buy limit, buy stop, and then you have sell limit, and then you have sell stop. So first, you have to identify what kind of trade are you making. Do you want to sell or do you want to buy? Okay. In this case, what we're doing is that we want to sell at 1.1293. Right? So we want to sell at that particular price. So let's try to put something here so that we won't get confused. So let's say you want to sell there. Right. Okay. So we want to sell there. So you've already decided that you want to sell. So you already eliminate buy limit and buy stop. You have two choices now: sell limit or sell stop. So what are you going to use? Now we use sell limit if we want to sell. If we want to sell higher than current price. So let's just make a legend right here. CP is current price. So we choose sell limit if we want to sell higher than the current price. So this is the current price. We want to sell higher. We use sell limit. Okay, so that's clear. What if we want to sell lower? Okay, let's say we wanna. All right, let's put that there. There you go. So let's say we want to sell at this particular level right here. Okay, it's at 1.1047. Okay, we want the price to go down a little bit more so that we're really sure that it already broke the support and it's gonna continue down. So we want to sell there automatically. So if you want to sell lower than the current price, you use sell stop. All right. So you use sell stop if you want to sell below the current price. Sell limit if you want to sell higher than the current price or above current price. Let's just change that to above so that things are much simpler. Okay. So you just put in your price here and then you choose, let's say, sell limit, and then we want to sell at 1.1293, 1.1293, and then your stop loss would be, let's say, 50 pips higher, so that it's not complicated. So that would be 1342, 1342, right? So we want our stop loss somewhere there, let's say 50 pips above, and then we want our take profit, let's say 100 pips below. So that would be like around 1.1193. 1.1193. There you go. So if you place this order, you have your sell here. Our stop loss is 50 pips higher, and then our take profit is 100 pips lower. We place sell here, and it's gonna give you a pending order, right? Same thing with sell stop. Okay. Now, what if you want to buy? Okay. Sorry, before I move on, is sell limit and sell stop clear? All good, all good. Is are they clear? Okay, right, right, clear, 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 clear. Okay, so let's continue. What if we want to buy? Okay, so let's say we want to buy below the current price. So let's edit it a little bit. Go with okay. Let me just edit it so that everything's good. Okay, so what if we want to buy below the current price? What we do is that we use buy limit. Okay, so if we wanna if buy below the current price, what we use is buy limit, and then if we want to buy above the current price, we use buy stop. Okay, so it works exactly the same way as sell limit, sell stop. Whenever you make a trade, you still key in your price over here, your stop loss over here, and your take profit over here. So everything applies the same way. So if you guys have your demo accounts, I suggest that you play with them next week. Just key in some pending orders so that you guys get used to stop losses, take profits, and buy limits, sell limit, etc. Okay. So it works exactly the same way. So don't forget this very short legend right here. I know it takes a little bit of memorization to do. It's kind of confusing, but it becomes less and less confusing when you apply it on your charts. Okay. All right. So I think we can move on from that. Okay. So those are your pending orders. Right now, I'd like to show you how to manage open trades and pending orders. Okay. But the market is closed, so I'm sorry, it's kind of limited with what we can do. But let's say you have currently you have trades open. To monitor them, what you do is you go to terminal. See that button right there? It directs you to the terminal right here, and then you have tabs below. We kind of covered this in the previous video. So what's important is your trade tab and then your account history tab. If you go to your trade tab, it's going to show you your balance, equity, and free margin, okay? As well as the list of all your current trades. So if you have any open trades, it's going to reflect there. Okay? If you have pending trades, it's also going to be there. Now, if you want to open and close them, you just double click on the trade. Let's say you have an open trade and you double click it on your terminal. What's going to happen is that it's going to open your order sheet again. Okay? You can change the stop loss and you can change the take profit if you want to. That's okay. But since the trade is already open, you cannot change the volume, and of course, you cannot change the price where you entered. You can only change your stop loss and your take profit. If you want to close your trade already, you will have a yellow bar here. See that blank area right here? That will be colored yellow. If you want to close your trade, you just click on that yellow button and automatically the trade will be closed. Okay. I'm gonna send you a link later. We have videos on that. I recorded it previously already while the market is open so that you guys can see. Okay. So that's how you manage your trades. You can close them and you can change the take profits and stop loss. Okay. For pending orders, you can change the stop loss, take profit, as well as the price where you want to enter. Okay. You can change those, or you can cancel the pending order and then just make a new one. It's much easier actually than changing those ones. Okay. Right. And then your account history, that is where all your trades are. If they don't reflect in your account history, just check the span of history that you're looking at. What you do is you right click on it, and then last 3 months, custom period, all history. Usually mine is at all history so that you can see everything that you did with your account. Okay. So, right, actually that's it for managing how to open trades, how to make pending orders, and how to manage inside trades. Any questions so far? Okay, I don't think that there are any questions. Okay, so let's just take a short 5-minute break, and our next topic will be um, candlesticks. Actually, let's make that 10-minute break. Just give me a little time to recover a little bit. Let's go with candlesticks. This is, if you hear about it, this is really basic, but it's not. Okay, it's really not. It takes a lot of getting used to spot good candlestick patterns and really understanding what the market is telling you through candlesticks. And I think that this is something I want everyone to master before they actually start trading live. Okay. So we'll be back in 10 minutes. Right now it's almost 10:39. So I'll be back at sorry, it's 9:39. I'll be back at 49. Yung trailing stop. Oh, yeah, yeah, right, right, right. Actually, that's an excellent question by Neff. For trailing stop, uh, it's kind of hard to demo right now because the market is closed. What you do is you go to your trade, and then you have your open trade right here. What you do is you right click on it, okay, on that particular trade, and then you have here a tab saying trailing stop. Okay, so you go to that tab, to that area, and then it's gonna ask you how many pips you want it for trailing stop. Okay, um, after the break, let me just look for the video. Let me just dig on it so that I can actually show you something. It's kind of hard to describe in words. I'll be back in 10 minutes. I'll try to look for the video as well. Thanks for pointing that out. Um, so 10 minutes. I'll be back 10 minutes. All right, so let's start. Are you ready, guys? Is everyone back? All right. Okay, that's great. Okay. Neff, I'm sorry I couldn't really get a video. Apparently, it wasn't included in the training video for MP4. Training stuff isn't there. So what I can do is that I'll try to explain it here, and then on maybe Monday or Tuesday, I'll put out a supplementary video on how to use trailing stop so that you guys can get back to it once in a while, right? And then also everyone can benefit from it. So for trailing stop, when you have an open trade on your trade tab under terminal, you right click on it and then there's trailing stop there. Okay? And then when you go there, it's gonna ask you how many pips do you want your trailing stop to be. Okay? So let me just explain how trailing stop works. Okay? So let's use the chart so that it's not too confusing. Okay? So let's take this out. Put it on the side for now. Okay? And then let's take out the trend line. And then let's say that you sold let's say you sold here. Let's put a little bit of a legend to it so that becomes clearer. Okay. So let's say the line over here is where we sold, okay, the pair, and then let's say this is your stop loss. So let's say you sold it here at the current price, and then your stop loss is over here. Okay. Now, let's say that after a while, the market moved a little bit downwards to our favor. Okay. Let me just change this a little bit. Okay. So let's say the market moves down to our favor. All right. So it moves down here. And right now, the current price is over here. Right? So let's put a marker there. Current price with profit. Okay. So let's say that's the current price right now with some profit on it. So roughly that's if we sold here and then it's already here, that would already give us, let's say, 115 pips profit. Okay, so let's write it down here. Okay, 115 pips. Now, our stop loss is over here. And then let's say we made a trailing stop of, let's say, 50 pips. Okay, we have a trailing stop of 50 pips. So what happens is every time the current price moves by 50 pips in our favor, okay, so let's say we change it to a trailing stop of 50 pips. Okay. Every time the market moves in our favor by 50 pips, so let's say right now it's at a 1149. So if it moves by 50 pips, okay, let's say it moves, let's just say it started at 50 so that it's not confusing. Okay, so let's say it moved down to 1100, okay, somewhere around that level. Okay, it moved here. So our stop loss also moves by 50 pips. So let's say our stop loss, to make it not confusing, is at 1.3. It's gonna, if the market moves 50 pips in our favor, it also moves down. The stop loss also moves with us by 50 pips. So it's gonna be around here at 250. Okay. So every time it moves again by 50, our stop loss again moves by 50. Okay, that's how it goes. So for example, this is the current price. It moves down by 50. Our stop loss is also trailing stop 50. It moves down as well. Okay, move 50, move 50, move 50, move 50. Now, what if it only moves like 49, okay, instead of 50 pips? Let's say the current price moves in our favor, but only up to 49 pips. Will our stop loss move? No, it will not. Okay, it has to move by 50 pips or whatever you set for your trailing stop before your trailing stop actually moves with it. Okay, is that clear? Does it make sense? Right. Okay, that's great. At least I'm glad that you guys got it. Don't worry, I'll also put out a video on this one. Now, just the tricky thing with trailing stop, your computer and you have to be should be open, and you have to be connected to the internet while your terminal is open before your trailing stop will work. Okay, if you have a trailing stop and then you close your internet, you close your platform, it will not move. It has to be open before it can move. All right. So okay, now uh, let's move on to our next topic, which is I'm gonna delete this, guys. Okay, I'm gonna put this in the chat box so that in case you want to copy it, uh, you can. There you go. So it's in the chat box. Right. Okay. So our next topic is candlesticks. Okay, anatomy of candlesticks. All right. So let me just go here. These are one of my old slides. Let's make it turn. Okay. So let's learn the anatomy of a candlestick first. So there are two types of candlesticks. You have a bullish candle and then you have a bearish candle. Okay. Bullish candle, bearish candle. So a bullish candle is the one on your left. Okay, it's the white one, and then a bearish candle is your black one. Okay, so you can change the colors if you want. Okay, but for now we're gonna use white and black. Okay. So you have several parts of a candlestick. Okay. You have your open, close, high, low. You have your body, and then you have your shadows. Again, you have your open, close, high, low, the body, and then your shadows. Okay. So remember, each candlestick represents a specific time frame. So let's talk about H1, the hourly candlestick. That means that is the price movement for the whole hour. So let's say right now it's 9 o'clock to 10 o'clock. So let's say that this candlestick is our 9 to 10 o'clock candle. Now, open is where the candlestick started. Okay, so let's say we have an hourly candle. It started at exactly 9 o'clock. Okay, so at exactly 9 o'clock, this was the price level that we had. Now, throughout the hour, of course, the market's gonna move. It's gonna create a high point and it's gonna create a low point, and that will be your high and then low. Okay. So let's say the market goes up to this level during that 1 hour, and then it also goes down to this level during that same hour. Okay, and then at the end of the hour, it goes back again and then closes at this particular price. So that will be our close. So again, let me repeat that. This is your open. This is where the market started. Okay. It ranged from as high as this one and then as low as this one throughout the hour. And then at the end of the hour, it closed at this particular price level. So it has created a full candle now. You have a body and then you have shadows. Okay. So for the body, okay, that is where the open and close range is. Now the shadows are where you have from the open or close area to the highest or to the lowest point. Okay. Those are your shadows. Now for a bearish candle, it's just the reverse of it. Okay. Since the market went down for a bearish candle, it opened at this price level, went as high as this one, as low as this one, and then closed at this particular price level. Meaning, from the time it opened to the time it closed, the market went down. So I think that's pretty clear for everyone. So this is collectively what it would look like. Okay, so you have a couple of candlesticks here. So this is the candlestick chart, and then let's say this is H4, which means every candlestick represents 4 hours. So let's have an example. I think it's better if we go to the live charts rather than seeing those small ones there. Okay. Just take these out. Okay, so let's say this is the daily chart and this is Friday. So you have here, it started at this price level at 1.1246. It went as high as this one. I think not much. It didn't really go any higher for the day. Just very, very little fraction of that. Went as high as this one and then went as low as this one. And then at the end of the day, it closed at this particular price. So let's talk about something. There you go. Let's talk about this particular candlestick over here. It started at, let me just zoom it in a little bit so that it's not painful to see. So it's a bearish candle. Let's talk about this one. I'm gonna encircle it a little bit. Anyway, use a different one. Okay, so let's talk about this particular candle over here. Let's change the color so that it's more pleasing to see. Alright, so there you go. So it started, the candle started over here, okay, at this particular price level, 1.12640. It went as high as this one. It's at 1284, and then went down as low as this one throughout the day. It's at 1197, and then closed at this particular price at 1224.8. Okay, so that's what happened for the whole day. Okay, so that's what your candlestick anatomy is. Okay. Right. So now this is where we actually need candlesticks. Okay? Each candlestick actually tells you a story. Okay? Each and every candlestick tells a story. What do you mean by that? Okay? Depending on what happened on the candlestick, actually tells you where the market is going. Okay? If there's strong buying pressure, if there's strong selling pressure, or if there's no pressure at all, meaning selling and buying pressure are pretty much equal with each other. Okay? So each candlestick actually tells you a story, and we actually categorized it in this way, okay? So it looks a little easier. So imagine that this is your whole candlestick. You have 100% to 0%. Now, the best way to look at it is where the candle closed. Okay? So let's say this is your whole candle, okay? And then it closed from 80 to 100%. So this is your whole candle, and then at the end of the candle, it went back up here and then closed from 80 to 100%. That means there is a lot of buying pressure, meaning it's bullish. So there's a lot of buyers in the market. They're buying the pair that you're trading right now or you're looking right now, and your next candle might actually continue to go up. Okay? So it's telling you a little bit of a story. If it closed from 60 to 80%, you still have bullish pressure, but not as much as having 80 to 100%. If this is your full candle. It goes up here, goes down here, and then ends at the middle. You have something neutral. 40 to 60% is somewhat neutral. Okay? Meaning there is pretty much equilibrium with buying pressure and selling pressure. If it closes around 20 to 40%, that would mean that it's already bearish. Not really strong, but bearish. Now, if it closes 20 and below, that means the candle is very, very bearish. Okay? So that's very bearish for that, meaning there's a lot of selling pressure during that particular time frame. Okay? So I'd like you to take this in and really interpret every single candle that you see. Okay, as much as possible, try to look at it on a higher time frame, because looking at candles at a 5-minute chart, 1-minute chart is those charts are giving you a lot of positive. Sorry, the audio was disconnected. Give me a minute. Right. Sorry, my audio got disconnected for a second right there. Let me just repeat that. So where was I? I'd like you to read every single candlestick that's given to you by the market. Okay? Try to interpret it. Of course, there will be a lot of false signals, especially at lower time frames. So what I suggest is that you kind of stick to the higher time frames because they're more reliable. Okay? But nonetheless, candlesticks tells you a story. Okay? So if it's giving you a bullish bar, okay, why would you sell? Okay? If it's giving you a fully bullish bar, let's say this is your whole candle, and then it ends at like 95% of the candle, why would you sell? Okay? Meaning there's still a lot of bullish pressure. Why would you sell at that very moment? Why don't you wait for a candlestick that's telling you that the market is already bearish? There's a lot of sellers already in the market. Okay? So this is actually a very simple tool that you can use for your trading, yet it's powerful. So let's go to the live charts. I always like checking the live charts for these things. Theory is it's nice to discuss theory, but it's better to discuss when you see it in application. All right. So there you go. Right. So currently Euro USD is on the previous day giving you a fully bearish bar right here. So what is this candlestick telling you? It's telling you that there's a lot of sellers right now in the market, or particularly on Friday. Okay? So this time might not actually be a good time to sell it. Okay? Let's talk about a few more candles. Okay, let's go back in history a little bit. Maybe let's go to this little area here. Let's start this area right here. Right? So let's start with this candle. So the candle went up and then went back down. That would mean it's kind of bullish. Okay, not very bullish, but it's bullish. Okay? And then suddenly it gives you this particular candle right here. Where did it end? It ended in the middle. That means it's already neutral. Okay, so there's already an equilibrium with the buying pressure and the selling pressure. Okay? Same thing with this one. Okay, equilibrium right here. Now after that, it went down here and then ended back here, meaning it's bullish again. It's almost actually very bullish. Okay? Now what happened next? The market actually did go up. Okay? The market went up here. So the buying pressure actually continued. Okay? Market went up here, but at the end of the day, it ended over here. So if this is your full candlestick, where do you think that's going? What is that? Is that bearish? Very bearish. That would probably be very bearish. You guys can type on the chat if you want. Or you guys can also turn on your mic if you guys want to, kind of put your 2 cents on this. Exactly. So Jesse says it's bearish. Actually, it's very bearish. If you look at it from here, check it out. It's almost below 20%, so that falls under our very bearish part already. So check it out. Where was it? Silicon market. There you go. See? So this is your whole candle. It's kind of below 20% already, so very bearish. And look what happened after. Market went down. And then, now it's just bearish, not very bearish. And next part is that it gave us kind of a bullish sign. The market, this is a small candle, so it's up to you if you really want to interpret that. It's nice to interpret candles that have, a bigger range rather than small candles. So it's giving you some sort of indecision in the market right now. Okay? So there might be some sort of equilibrium. Okay? Now what happened next? Spiked up and then spiked down. So these candles are still telling you that the market is still bearish. So what happened after? After this one, a little bit of equilibrium, okay, and then went continue down. Okay. After that, what did this candle tell you? It's already bullish. Okay. Next candle, it did go up. Okay. Again, it's kind of bullish. Okay. And then market spiked up, and then market went down here. Okay. So the market is telling you that it's very bearish right now. Okay. And then suddenly on the next candle, it tells you that nothing's happening. Equilibrium. Okay. So what do you want to do? Okay. Probably stay out of it because there's nothing to do. Okay. After that, still in the middle, okay, still closed in the middle, still neutral, and then boom, it gives you a bullish candle. So what do you do next? Okay. You might want to go long a little bit. Gives you a little bit of indecision, spikes up again. Okay. Spikes up again, so it did, the market did go up, but at the end of the day, it went back a little bit neutral. Okay. Gave you a bearish candle here, stayed a little bit, so it's giving us a lot of neutrality for the past few days, and then suddenly Friday, boom, it's giving us a fully bearish bar. So what do we do next? Naturally, we should look to sell the market. So we don't instantly sell. Okay? I'm just giving you an idea on how to interpret the market. Okay, so we're not gonna base our trade solely on this one. Okay? It takes more analysis before we actually enter a trade. But what I'm giving you right now is just an idea on where the market is actually going. What is the market telling you? Okay, what story is it telling you right now? Okay, so that's why I'm saying that candlesticks are very powerful. It's so simple, yet very powerful. A lot of traders who had a lot of experience in trading already and aren't successful yet actually skip candlesticks, okay, because they think it's too basic. So they go to something more advanced. They always look for something higher, something bigger, but they kind of forget that it's already in front of them. So, okay, I think are there any questions with understanding candlesticks, like the logic behind it before we go to the patterns and stuff? Any questions? All right. So I don't think that there's any questions. So everything's pretty clear. So I'm glad that you guys got it. We have a very intelligent crowd. Uh, would you discuss when we will enter the market? Yeah, definitely we can. I'm not sure if we can do it this session, but maybe next session when we patch everything together already. Uh, that's basically what I planned for the last session, how to patch everything up, because we actually learned a lot from these sessions. We learned trend, we learned supports and resistances, and then now we're learning price action. Actually, this is already price action. What I'm teaching you. This is the basics of price action. They kind of brand it outside as something really complicated. Learn the something price action. Okay? It's not really that complicated. It's actually just how the price moves. Okay? So this is actually price action already. Hopefully we can have someone who can discuss price action more in depth. I haven't told them yet, but I hope that they will have time to share a little bit of their knowledge. I'm looking at Bro Eman and Bro Jonathan Filoteo. Those guys are pretty amazing, decent, 30 people. So I hope that they would also be able to contribute to one of our webinars soon, because those guys are really good at price action. Anyway, so let's continue on. Next one is patterns. Okay, so let's go with the single candlesticks first. Okay, now there are a lot of candlestick patterns out there, like literally a lot of them there. Now we cannot discuss every single pattern that's out in the market. Okay? You guys can research it on your own. But what I'm going to show you is what I use, okay? So that it makes more sense, because I don't want to teach something that I don't actually do. Okay? So there's actually only for single candlesticks, what I use are just pin bars. Okay? That's basically what I use for pin bars. Okay? What are pin bars? Pin bars look like they're out called as shooting stars and hammers. Okay? They call them shooting stars and hammers out in the market. Okay? So they kind of look like this. Where are my charts? There you go. They kind of look like this one. Okay? You have here a bullish candle, and then you have here a bearish candle. Now, what I usually look for is a hammer or a shooting star. Okay, this is what you call a hammer, and this is what you call a shooting star. Okay? Now, what happened here if you have a hammer? Basically, the price started here, okay, at the top, and then at a certain point of time, it went down here below at the end of our shadow right there. So at that particular time, the market is telling you that there are a lot of sellers, like sell, 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 sell. So it's giving you like a fully bearish bar at that particular moment in time. Okay. Now, before the time frame ended, let's say this is an hourly candle, or let's say it's a daily candle. Before the day ended, the price went back up, okay, from the end of the shadow back up to the top of the whole candlestick. Maybe not particularly at the topmost, but maybe let's say a good 80 to 100%. It's telling us that it's very bullish. Okay. So what happened there was that the buyers were able to overcome the sellers. Meaning, at that particular point in time, there were a lot of sellers, but but a lot of buyers came in and then overpowered the sellers. That's why there's a big dip down, and then suddenly the price went back up. Okay. What happened there was that there's a lot of buying pressure if you see those types of candlesticks. Okay? So that's a hammer. Usually that happens when the market is steadily going down. Okay? It's going down, 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 down. And then if it reaches a significant price level, let's say a support, a demand zone, what happens there is that there's a lot of buyers that overtake the sellers. Okay? Because the price is already low and people want to buy now. Basically, that's what's happening. So that would be a good reversal signal. Okay? So the market is already telling you that there might be an imminent change in price movement. From going down, it might go up now because the buyers were already have already overtaken the sellers. Okay? Now, if you look at the shooting star, the one on the right, okay, it's exactly the same thing. Just from going up, okay, up, 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 and then suddenly the price spikes up, okay, to the top of the shadow, and then the sellers overcame the buyers and then went back down. Okay? So it's giving you a fully bearish bar, like below 20% of that candlestick. That means the sellers overcame the buyers. So there's a lot of selling pressure right now, and that is telling you that there might be a change of trend. From going up, it's going to go down. So actually, that's what I use personally. Pin bars, I call them pin bars. I actually enrolled in a particular course before that called them pin bars. You guys should too. It's an amazing course. It was a couple of years ago. So, all right. Let's check out the markets. Let's try to spot pin bars. So you have one over here. Can you give me a minute? I just like to change the shapes. Just add it here. Alright, okay. So this particular one here is what I would say some sort of a shooting star. It's not perfect, okay, but the market will almost never give you perfect circumstances. So you have to look past that. So you have some sort of a pin bar. It goes up and then it goes down here and then back up here. So it's giving us a bearish bar. Okay. So that means the market might be going down. So if you've noticed, this pin bar actually falls under our demand zone over here. Sorry, supply zone rather, or resistance. You can call it resistance. We tackled this in the previous video. Okay? So it hit a particular level and then it went back down. So that's kind of a double confirmation for me. And then that might actually be a good trade to take. Okay? If you want to sell over here, and then you want to have a risk reward of 2:1. So that's like let's say 100 pips here, and then your target would be like 200 pips, somewhere over there. Okay? So that's a good sign right there. We have a question here. What particular time frame do you use that? Personally, I use that at actually all time frames. I actually do use that at all time frames. I use that from the weekly chart. I use that from the daily chart. If I'm looking at long-term trades. For swing trades, H4, H1, I do that. And then I also do a lot of short-term trades actually. I usually enter at M15. It might be kind of crazy for people who are still starting in trading. I don't actually recommend it for now. But I do enter at M15 if I see like two pin bars at the same time, and then it's at I have certain conditions before I enter the trade. That's when I actually enter. Normally those conditions are around like 3-4 p.m. in the afternoon, London open. So that's when I usually enter. So it actually applies for all time frames, but not anything below M15, please. Okay, M15 above. Okay, so I'll also that's a pin bar right here. Let's look for a pin bar down here. Okay. I think we also see over here. This is also another nice example of a pin bar. Okay. Let's look if it also falls at a significant level somewhere. Right? Okay, so if you check it out, this would be your some sort of a resistance over here. Okay. And then you have a pin bar right here. It hits that. That's a really nice signal for you to sell that trade right there. Okay. So if you're looking at 2:1 risk reward ratio, you're risking like 150 pips, and then your target is like 300. It actually reached it in a month. Okay. So I hope you guys are kind of seeing where I'm going. Okay. We're slowly combining what we learned on the previous webinar with what we have right now. So that's a nice shooting star over there. Okay, so let's move on. Aside from pin bars, you can also have engulfing candles. Okay. Engulfing candles look like this one. Okay. It's too small. Sorry. There you go. Okay. All right. Engulfing candles normally look like this one. Okay. You have a small candle here, and then the next candle just killed it. Okay. For example, you have a small bullish bar here, and then you have a big bearish bar here that engulfed the whole previous bar. That is what an engulfing candle is. Okay. So in that this particular thing tells you that there is strong movement with the candle that comes after the small one. Okay? So for example, you have a small bullish bar here, and then a big bearish bar ate it. That means that the market is bearish right now. It's going down. Let's look for more examples of engulfing candles. You actually have look for a few more engulfing candles. This one, okay, it's not perfect. It didn't eat the whole candle here, but it kind of shows you that there's a lot of movement right here. This particular candle might be a better example. There you go. So you have a small bullish candle here, and then ate by the big bearish candle, and then see what happens next. Sometimes but it doesn't always work. Okay? So it also has to fall under significant level. Okay, if it's in a support, resistance, and then you have an engulfing candle there, that's a good time to take it. If it's in the middle of nowhere, just like this one, okay, you have an engulfing candle here, a bullish engulfing candle. Okay, and it's kind of in the middle of nowhere. There's actually I don't really see any supports right there or resistances. It's just kind of in the middle of everything. So that might not be a good trade to take. But nonetheless, this is still an example of an engulfing candle. So you guys can also take that. Okay? That particular signal for me means a continuation of a trend or a good reversal. Okay? So you can also have that under your arsenal. Right. Aside from pin bars and engulfing candles, there's also one candlestick pattern that I look at. So this involves a lot of candles already because pin bars are um, single candle signals, and then engulfing involves two candlesticks. Now, I also use a particular one that involves several candlesticks. It's fairly easy to spot. They're called tops and bottoms. Okay, double top and then double bottom. So a double top is exactly what it says. It's like two hits on the top. Okay, so it goes up, goes down, hits it again, and then goes down again. So we have like two tops. Okay. Double bottom is just the exact opposite. It goes down, bounces up, goes down again, and then bounces back up, almost at the same level. Sometimes it's a little lower than the second one. Sometimes it's a little higher than the second one. It depends on the market. So I'll show you some of the trades that I actually took before. I think I posted them on Facebook. So these were the good trades, and I also have bad trades, by the way. All traders do. So I'll also maybe I'm not sure if I put it in here, but I may be able to. Hopefully, I'll also able to show you some of the bad trades that I took. Bad trades meaning that the market just didn't go my way, but the strategy remains the same. I'm still true to what I do. Okay? All trading strategies are not 100%. At some point in time, they will fail you, and that's okay. So just make sure that you make more profit than losses, and then you just follow your strategy very religiously. Okay. Anyway, so this is an example of a good double top that I took before. So that was like a couple of days ago. Yeah, I think a week ago. So, okay. So for example, so the market has been going up and up and up and up and up. Okay. So and then suddenly the market goes up and then bounces down. Okay. So that's your first stop right here. Okay. It goes down again and then goes back up. Okay. And then on the second leg of that double top, that's where I usually wait. Okay, so let's check it out if it goes through or gives us a reversal signal right there. So at this particular point in time, it did give us some sort of a reversal signal right here. You have some sort of an engulfing candle at a particular significant level. So that actually might be a good trade today. Okay? Actually, I was a little late when I got in. It gave me another bearish candle here before I actually entered. Okay? So I entered at around 0.7448, and then my stop loss was above here, so it was like around 40 plus pips stop loss, maybe around 50, I think. And then take profit was around 100, so it was around somewhere here. Okay, so in a matter of 2 days, I was able to hit my take profit over there. So this is a good example of a double top. Now, prior to that is also a good example of a double bottom right here. So I don't think it's a double bottom, by the way, but a little bit. You have here, I think I missed this particular trade. Okay, I didn't buy this trade, but this is also a good opportunity for us. So the market went down, 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 okay, and then went back up, consolidating a little bit, okay, went down again, and then it gave us, so this is our particular area right here, and then at that moment in time, the market went through a little bit, if you look at it over here. So it went down like 3 pips, a little bit, probably hit a lot of people's stop losses. I'll discuss that a little later when I talk about market makers and just my 2 cents on it. It may hit, went down a little bit. It probably hit a lot of people's stops, and then it gave us some sort of a reversal signal. So I hope you guys know what this is. It's an engulfing candle, and then the market went up. Okay. So that is also a good example of a double bottom right there. I'll show you another one with my CHF trade. Okay. This is I was actually hoping for a double top over here. As you can see, the market has been going up, 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 and up. And then at this particular moment right here, okay, it gave me some sort of a signal that the market is reversing. Okay. So I'm not selling there yet. I was actually waiting for the market to go back up again and then give me some sort of a reversal signal. Okay. Now what happened was it broke through it with a strong bullish bar and then just took it back down over here. Okay. Now, this wasn't part of my previous lectures, but this is what you call a stop hunt. Okay, I'll discuss it a little later on what a stop hunt is. Okay. So the market is just trying to hit everybody's stop losses right there, and then just takes it back down. Okay. So if you actually look at the M15 chart, that would look a little clearer. Where is that? There you go. Okay. So it would actually look a little clearer. Push, 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 and then went back down, and then down, 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 down. Okay. Maybe I can discuss this some other time, but to me that is a very clear stop hunt. So I was able to enter that trade maybe around here. I marked it down. After the strong bearish bar here, I already entered that trade. My stop loss was just above this area, just a few pips above that. Okay. So going back there, I was able to exit trade a few days later around this particular area right here at 0.9703. Okay. So why did I exit at that particular area? It was because this was a previous resistance, and then that's where I wanted to exit. So also another example would be AUD USD. This is part of our weekly analysis. I've been showing everyone already. So you have like a pin bar here. Let's kind of zoom in so that we can see. You have a pin bar here. You have a pin bar here. It goes down a little bit, goes back up again, and then hits you another pin bar there. I believe that the market will continue to go down, okay, because of these particular signals there. What are the candles telling you? The candles are telling you that there is strong selling pressure. So for me, that's the reason why I think that the market is going down. I actually took a very short trade there. I marked it down again with those two lines over there. I was able to sell over here. Okay. Actually, that's a terrible trade that I took because my stop loss was really big. Okay. So the market went back up here and then gave an engulfing candle here. I should have entered over here, but I didn't. I was late, and then it went down, down, stayed here, and then down, down. I saw the market was still continuing to go down, so I entered it around this level here. There was an M15 entry there, and then went just out here. Gave me like a 1:2 risk reward ratio. So, and then last one is another double top from the Euro USD a few days ago. Well, not really a few days ago. I think it was a month ago. This was also one of the trades that I took. So you have your first top here, down, and then second top here. It didn't really give us any clear signals on each one, but if you look at M15, it looks a lot clearer over here. Let's try to look at it. Uh, there you go. So you see, this is what it looks like at M15. It looks like actually a mini double top. Okay. So that's where I particularly entered after that whole scenario right there. And I was able to enter here, and then I was able to exit around here at this particular area. I think that was also like a 1:2 risk reward ratio. I think stop loss was like, no, actually it wasn't like 1:2. It was almost 1:2. Okay. Anyway, so those are some signals that you'd like to see with your candlesticks. So I think, so let's recap a bit on what we got. For candlesticks, all candlesticks tells you a story, and it's very important to look at what they're telling you right now. Is the market bearish? Is the market bullish? Okay. After that, you look at particular single candles like pin bars. Maybe you can use that. You can also research on your own single candlestick reversals or whatever. There's a lot of patterns there. You can also check out engulfing candles, and then you have big candlestick patterns like double tops and double bottoms. There's also a lot of them out there like head and shoulders. Um, I forgot the other ones, but because I don't really use them. But you can also research on your own, whatever you're comfortable with. Okay. So, um, I actually that's pretty much it for candlesticks. Do you guys have any questions with candlestick charts or with what we discussed before we take a break? Okay, none, none. All right, that's great. In any case, if you guys think of something um, during our break, just shoot it out. Okay. Um, Surprisingly, we actually don't have a lot of time left. So we have like 20 minutes left. Let's just take a really short break, like 5 minutes. Okay. I'll be back in 5 minutes. Right now it's 10:38. Let's be back around 10:34. Okay. Very, very specific time. Huh? Okay. I'll be back 10:34. Sorry, 44. Right? I'll be back in 5 minutes. Right. Okay. So, all right. Welcome back, guys. Um, okay, now let's talk about something interesting. So, we're done with candlesticks, and I hope that help you guys in your trades. Try to keep your trading simple. Try to interpret the charts very simply. Okay, what is the market telling you? Right. Anyway, so this is going to be a very interesting topic. Our topic are brokers and market makers. I'm sorry I don't really have a slide for this one, but let's just talk about it because it will actually make a lot of sense after you understand how the forex market actually works behind your charts. Okay, what do you mean by behind your charts? Um, okay, let me uh, just maybe throw your bone with my ideas. I'm not saying that this is true for everyone. This is just what I believe is true in the market. Okay? Imagine that um, let's say the euro is going up and the dollar is going to shift. Okay? Let's say euro is going up and then the dollar is going down. Okay. Now let's say you have US dollars. Okay. Now you go to a bank. Okay, or let's say you go to your friend. Let's say I go to you. Okay, I have US dollars and then you have euros. Okay, and we both know that the euro is going up and the dollar is going down. So what I do is that I have US dollars and then I tell you, hey, why don't we exchange money? Okay, here is here are US dollars in exchange for your euros. Okay, so I'm gonna get your euros and I'm gonna give you US dollars. Okay, so what happens? If you think about it, just think about it for a second there. What happens? Do you feel good about that trade? Naturally, no. Okay, because you think that you're getting robbed. Okay, because both of us know that the euro is going up. So why would you give your euros to me? Now, let's say you're a bank. Okay, you're a bank. You're a liquidity provider. And the law dictates that you have to sell your euros to me and you have to take your US dollars and you have to take my US dollars. How would that make you feel? Of course, that would make you feel terrible. So that is what the liquidity providers are actually doing on a daily basis. Okay? They have to take your trades. They have to fill your orders. So naturally, if you think about it, they will lose a lot of money if they do that freely with everyone. So again, this ideas might be a little radical for everyone. Okay? I apologize in advance if you don't agree with me. That's okay. Okay? Let's agree to disagree. But this is what I believe the market, what is true to the market. Okay? So if you're thinking from the bank's perspective, if you're thinking from the liquidity provider's perspective, okay, what do I need to do to not lose money by having that transaction? It's actually to discourage you to take that trade. So I have to discourage you to take that trade. So what do? I give you false signals in the market. So that's what I call, um, or let's say you already took the trade. Okay? Let's say, um, let's have an example with Euro USD. Is that it? Exactly, false breakout. Thank you. That's called a false breakout. Okay, let's say it goes back, it goes up, and then I think we discussed something earlier, uh, like a big stop on, or it's a big stop on. Okay, let's go with this one. All right, this is pretty simple. Right, so you have some sort of a resistance over here. Okay, uh, let's start from here. This is gonna be very interesting. Okay? You have like a couple of candles here, candles, like giving you a really neutral price, and then let's say the bankers know the market is going down. The euro is going to shit and dollar is going down. Okay, so naturally euro dollar is going down. So candle, and then they push the price up quickly. Boom, boom. Okay. And then after that, now you're thinking that, hey, the market is actually going up. Candle, and then gives you another boom, bullish bar. So at one point in time, this full bar right there is actually a bullish bar. Okay. So everybody here is thinking, oh no, it actually already broke out of our resistance right here. It's already out of the range. The candle is not yet closed. Okay. But people are saying, hey, I might actually miss this trade. Okay? So they enter the trade here, and then suddenly it goes back down here. So what is this big candle telling you right now? It's telling you right now that it's going down. Okay? There's a lot of selling pressure right there. Okay? So what happens? Candle, and then suddenly it goes down. So what happens here? A lot of trap traders are here. A lot of people bought at this particular level when the price broke out. And then suddenly, the market just snatches it away from them. Now, same thing. Some people had the right trades already, okay, and then they put uh, very thin stop losses. What does the market do? The market pushes the price to your stop losses already, okay, hits your stop loss, and then goes the right way. Okay. Has anyone here experienced that? Okay, you had the right trade, you had the right supports and resistances, you had the right signal already, and then suddenly the market just hits your stop loss, just right at your stop loss, maybe just a few pips above it, okay, and then goes back down. Okay? Don't feel alone. That's not only you. That's like a million traders in that particular trade, because the market knows that the stop losses are already there. All right. So um, that's what liquidity providers do. That's what the forex market does, and we can't do anything about it. Okay. What we can do is that we have to, well, think like that. Okay? That's why we always trade. I'd like to take note of this. Always trade on closed candles, meaning candles that have already ended. They never trade on candles that are still open, because they might give you the exact thing that we pointed out earlier. At this particular point in time, this was a fully bullish candle, and then it just snatched it away from you, right? So always trade on closed candles, and then number two, always trade um, with several signals with you. Just never trade with one thing, like uh, a pin bar, and that's it. That's what you're trading. Don't do that. Okay. Always, um, always check several factors before you enter a trade. Like a double top, that is something that I actually like, because what is a double top? Okay, if you think from the market maker's perspective, all right, let's kind of describe it a little bit. So you have here bullish movement, up, okay, up here, and then gives you like bullish, and a lot of people right now are thinking that I'm missing the trade right now. I have to buy because the market is already breaking out. You have some sort of resistance here. It broke above here. So a lot of people are thinking like, hey, we should buy here, okay, because the market is going up. Okay. And then the market snatched it down. So what you have here are a lot of trap traders. A lot of people bought here, and then they push the price back down. And then after that, market makers get a little greedy. They push the price back up again to induce more traders to buy. Okay? And then suddenly, a lot of people say, hey, the market is continuing, the trend is continuing, so let's buy more. Okay? And then suddenly it goes back up here. Okay, lets the price stay there a little bit. But for us, what are we seeing supposedly? We're now seeing a double top. Okay, because here we don't enter just yet. Okay, with this particular trade, we're not gonna enter that. We're not gonna enter there yet. Okay? There's no confirmation, no nothing. Okay? We're not gonna buy with that. With the retail return. Okay? So we wait for it to go down, go back up again. Okay. So a lot of people are being induced to trade more, to buy more. Okay. For us, what do? We wait for a double top, okay, with signals and confirmations. Okay. So now it's giving us a second top here, a possible top, and it's giving us some sort of signals over here. Okay. Went back up, and then suddenly down. And then that's where we enter the trade. Because at this point in time, the market makers already have a lot of buy trades above here, and then if they push the price down, okay, if because the price really is going down, okay, if they let the price go down, what happens? A lot of people lose money, traders lose money, and then the market makers will basically end up with their account. Okay. It's a sad truth, okay, but I'd like you guys to know that because this is what I believe to be true in the market. So basically, that's the side of the liquidity providers. Okay, it's a sad truth. I know. It's not a pretty world. Okay, so I hope you guys understand that liquidity providers and the big banks need to make money. Okay? They don't give money away for people. Okay? So what do we have to do? We just have to be smart. Okay? We have to think like that. So, all right. Now, aside from that, is that those are the big banks, the liquidity providers. Okay? Now let's talk about brokers. What do brokers do? Okay? Brokers, what they do is they facilitate your trades to the liquidity providers. Okay? So they let people with smaller accounts trade in the big market. Because if you're gonna go straight to the liquidity provider, my God, it's gonna cost you a lot to have one account. Okay? Honestly, it's an insane amount before you can actually open one trading account. I think the minimum is like $100,000 minimum. Okay? And not all actually accept that. Normally, it's like more than that. To have a liquidity provider behind you. In any case, so now since if you actually check the statistics, 95% of traders fail. Okay, so that's an actual statistic. So it's kind of sad. Um, so if you're the broker, think from the broker's perspective. Okay, if you're the broker, um, and you know that 95% of traders fail, you would understand that a lot of the people who um, opened accounts with you would fail because of just pure statistics. Okay? It's not that you want them to fail, it's just from pure statistics. Now, as a broker, they have the option to send your trades to the liquidity provider. Okay? So let's say I open the Euro USD trade, and then the broker should just send that trade to the liquidity provider. Now, brokers have something called a market maker license. Okay? A market maker license allows them to take the trades on their own. What do you mean? If the retail trader buys euro, the market maker will sell the euro to them, meaning the trade did not actually go to the liquidity provider, but just to them. So what happens is, if the trader wins, the broker loses. If the broker wins, the trader loses. So it's going to be a little bit of a zero-sum game if you're trading with a market maker. Okay? So just because of that statistic, 95% of traders fail. A lot of brokers actually build their business because of that. Are you still? Is it still clear? Are you still guys following me? It's already 10:57. I'm sorry. Is it okay if we extend for like 5-10 minutes? I'm sorry. I'm taking a lot of time. Right. Okay. Anyway, let me continue. So if you think from the broker side, you'd actually make more money by having a market maker license than actually just sending trades to the liquidity provider and just getting a very, very small fraction from the spread. So that's what I want you guys to understand. Now, as a market maker, there are a few perks that you actually get. Okay? And they do a few things to force retail traders to fail in their trades. Okay? There's something called it's called spinning. This is something that I learned from. I already know this method, but I didn't know that it was actually called spinning. Okay? This is what I learned from Sir Marcus Lau from Brightwin recently. He calls it spinning. Um, so maybe you've already experienced, guys, that when you open the trade and then the market is live and it's moving, and then suddenly it's just giving you like it's like spinning right there. Like you open the trade and then like waiting. The market is just spinning, waiting. Okay. What the broker is actually doing right there is that it's just pending everybody's trades at that moment because the broker doesn't know if the market is going up or going down. Now, if the market goes the right way, what happens is it gives them a recode. They just cancel all orders at that moment and then gives everyone recodes. Recodes meaning your trade is not entered and they want you to enter at a different price. That's a recode. Okay. But if the trade goes the wrong way, meaning the retail traders will lose, then they let the trade open. Okay. That's called spinning. That's one of the things that they do. Um, Also, a second thing that they do is widen the spread. Okay, I've experienced this like multiple times already with the brokers that I used to trade with. Now I don't trade with them. Okay. What happens is at a particular moment in time, they actually spike the spread. Okay, so for example, your spread is like 2 pips, and then suddenly they spike it like 5, 7, sometimes worse, even 15. I experienced a 15 pip spread, okay, spike, especially during news. Okay. So that's really terrible. Having 15 pips, it's okay for the spread to widen during news. It's natural for that to happen because there's a lot of volatility. But having like 15 pips of spread is like crazy. Okay. So they also do that. So I would just like you guys to know that and just know your brokers well before you actually trade with them. Okay. Most brokers, actually all brokers, I think have market maker license, but it's really up to them to use it or not. Okay. Most of the time, ECN accounts are the safe ones because ECN uh, directs the trades of the retail trader towards the liquidity provider, meaning there are no broker interventions anymore. Okay. There's no dealing desk anymore. It's called the dealing desk for market makers account. Okay. For dealing desk, the trade goes to the broker first and then sends it to the liquidity provider. So the accounts that you should um, look out for are the two accounts. Mainly, you have ECN accounts, and then the second one is you can opt for STP accounts, straight through processing. Okay? Those are the ideal accounts that you should be taking so that you can avoid market maker accounts. But let me just give you an idea. Okay, some brokers say that they're STP accounts, but they're actually market maker accounts. So I just really want you guys to know your broker well before you really trade with them. Okay, and most of the time, if you're experiencing a lot of recoats, that would probably be a market maker account. ECN accounts should not have recoats. Okay, there are no recoats with ECN accounts because you're going straight to the liquidity provider. Right. So actually, that's my 2 cents on brokers. I hope that you guys understand a little bit of how the forex business actually works. It's not all um, butterflies. So it's also a business. So I hope you guys understand the perspective of the liquidity providers, banks, and the brokers. And then we just have to work around it so that we can avoid these things in the future. All right. So, are there any questions with regards to that? Okay. None. All right. That's great. Um, All right, so that's great. If you guys have any questions, just shoot your questions on the group. Just a few things before we end. I just like to give everyone some interesting updates. Number one update is for our trading camp. Okay, so our trading camp. I'm so sorry it took us a very long time to get a place. We actually chose from different ones, and then we actually had one before, but um, suddenly we got bumped off. That's why it was pretty annoying. That's why it took a long time. So we had to change venue. So we actually want it at Cocoon Hotel. It's located at around Timog area. It's near there. Okay. I will send the details soon. This is what the place looks like. There's actually a big conference hall there where we can host a seminar if it pushes through. And then there's a bar outside with a pool. I'm not sure if you guys can swim in it, but it's a pretty amazing place. And I think we can, have a really nice, relaxing time there. Talk about trade, all your questions. So it looks pretty amazing. Very relaxing place. So I think it's a nice hub for us. So is the webinar going to be during Saturday? For next week, I'm not sure if we can push through with the webinar next week. If I can find someone to talk about price action next week, it would probably push through on Saturday. Because on Saturday, I'm sorry, I have an out of town business trip from Friday to Sunday, so I won't be able to host the webinar. But let me just give you updates on it for the whole week. Okay. For the trading camp, we have to have a minimum of at least maybe 10 to 12 people before we can actually fully confirm. Okay, if people paid before the event and then it pushes through, that's great. Okay, if it doesn't push through, we'll just return everybody's funds, and then what will happen is that we are just going to party. Okay, party and then party na lang tayo, and then inuman and then kwentuhan, just like what we had on our previous PAFTI events, especially during our Christmas last year. I think we had one. So it depends. Okay, if there's a good demand for the seminar, the full seminar, we will push through with it. But if not, we will still have a anniversary party, pero more on inuman na lang and then kwentuhan. Okay. So anyway, there was also something that sorry, there's something that I'd like to show everyone. Right. Um, it's still in the works, but a few days ago we talked to Brightwin and then Alpha Play. Actually, PAFTI right now is filtering brokers and filtering educational providers because we don't want to limit our group to good educational providers and good brokers. Okay, so we can't just hold everyone here in with what we're teaching. Okay, we also have finite resources with what we can teach everyone. So we also like to connect everyone to good educational providers, given that we filter them and everything. So we're working on a certain project, and that particular project is that we're actually going to sponsor one particular trader, one or two particular traders. Um, we're going to teach them a certain strategy taught by Alpha Play. It's by Angkar Yong. You can look him up on the internet. He's a very popular forex trader in Singapore. He's an amazing guy. We met him personally, Alex and I. So we might actually be sponsoring someone to trade. Okay, and we're gonna teach what Angkar Yong teaches. It's actually a very expensive course, and they're gonna give it to that particular trader for free. We're gonna teach everything for free. It's actually $600+ if you count it, but we're gonna give it for free. And then aside from that, what's interesting is that we're gonna give that person an actual live account to trade with, and that will be like a managed fund. Of course, there will be like LPOA and everything. There's like a maximum that you can only lose for it. But if you do profit from it, your profits are yours. Okay, so you have a certain percent there that will be yours, right? So we're looking for that particular trader there. We're looking for someone really serious. So maybe over the course of the next month, we'll look for one or two traders that will fully commit to that strategy. And the managed fund is no joke. We're not gonna give like $100, $200. We're looking at thousands of dollars. Okay, so because you can't trade on $100 account, it's crappy. Okay, so we want something like really serious. Okay, so that's gonna be an interesting update, and that's actually sponsored by those guys, which is interesting. And I hope we get positive results from that. Okay. So actually, that's the end of our webinar right now. I'm sorry I extended like 8-9 minutes. Okay, not much really. Okay. But I hope you guys learned a lot from today's session. Actually, it was a pretty jam-packed session. We learned a lot. So MP4 candlesticks. Candlesticks are very important, guys. Please understand that. And also brokers, which is not public knowledge. A lot of people don't actually discuss that stuff, and I hope you guys learned a thing or two. Okay. So anyway, thank you guys for attending, and thank you for giving time on a Saturday night from 9 to 11. That's like prime time stuff. And I'll keep updated with our Facebook group. Okay. Thank you guys. Good night. Have a great evening. Have a fun weekend, and thank you everyone. So bye bye. God bless you guys too.